I'm Mark Oschlager, a residential mortgage loan officer with Cascade Mortgage, and this week's video is entitled, How Much Should My House Payment Be? It seems like maybe a fairly straightforward question, but is it? If everybody that's watching this video probably earns a different wage, and everybody that's watching this video probably carries a different amount of debt. People watching this video have different spending habits and savings habits. So we're all different and we're all unique. So to try to put our finger on what is the ideal house payment, well, we can't really do that because what's right for you may not be right for me and may not be right for Uncle Joe. So let's take our cues from what a lender thinks that we can afford. Banks have done much research in trying to determine the appropriate amount of debt that someone should carry before they're getting themselves in too deep. Banks have models that they've determined that if someone's debt is too much of a percentage of their monthly income, that the default rate on those loans is much higher. So someone is then maybe not able to carry a mortgage and afford things. So what is that number? Banks typically do not want to see more than 40% of your gross monthly income go toward all of your obligations. So what does that mean? So if we earn, let's say, $48,000 a year, that's $4,000 a month gross income. Well, 40% of that would be $1,600 a month. Banks tell us that if your debt that you carry is more than $1,600 a month, then things might start getting a little bit hairy for you. We don't want to be eating ramen noodles for supper every night. What goes into that 40%? Gym membership, cell phone, things like that? No, not typically. Typically a bank is going to want to limit what goes into that 40% to items that appear on your credit report, like auto loans and installment loans, school loans, revolving debt like credit cards and things like that. So if you carry a $250 a month car loan, and let's say you have $100 a month in other debt, credit card, minimum payments, something like that, that's $350 a month. The bank will then subtract that $350 from the $1,600 that they think that you should be carrying, and that would leave us with about $1,250 as what a bank would allow your house payment to be. So if you're looking at property that would give you a house payment more than $1,250, well then you may be looking at property that may be unaffordable, and also you may be in a situation where a bank is not willing to take on that risk. Now we all have different abilities to repay, and some people are willing to carry higher levels of debt. Some people want lower levels of debt because they have different spending and savings habits. However, if our income compared to our debt exceeds 40% of our gross monthly income, we could be in a situation where at some point it could be difficult. One, for us to repay, and two, to get a mortgage. So hopefully that's helpful information to you. I would love the opportunity to analyze your financial profile, income compared to your debt, and I can help you with some of those calculations to make sure that the amount of debt that you're looking to carry is something that is appropriate for you and also something that a lender will approve. Again, my name is Mark Oschlager with Cascade Mortgage. You can reach me at 612-252-3357. Thanks for watching.